Good morning, everyone. Welcome to the tradingsyndicate.org. I'm JJ. Hey, Josh, how you doing? What's up, Johnny? Lonigan, good to see you guys. Oh, boy. Hey, Travis. Renee, how are you? Well, here we are again. Wednesday, and we are exactly 1 week away from month end now. And the market is showing us some interesting stuff. If you'll notice, every time we have a liquidation, the market kind of bounces back higher. Uh, okay, trend traders will say that's because of an uptrend, and they're right about that. Um, but also, the mechanics of it are kind of interesting. Any sort of liquidations we have, when we put in that all-time high 2 days ago, it liquidated, and then we liquidated down in Globex and yesterday. But look where we closed. We closed way up here. Hey, Trademaker, how are you? Rasto, what's going on? Hey, Raj. So now overnight inventory is long, okay? Which means that the bulk of the trading is above yesterday's close. Now, what that means is we should be looking for a move down, right? We're in distribution because we took this stuff, we bought it all down here, and now we're selling it back here. Let's see if we put it on sale and come back down to the close. Now, the problem is we are at all-time highs, okay? Hey, John, how you doing? We're at all-time highs. So, and month end is next week. So, all sort of dips are being bought, which is tough for people who are short down here, short anywhere on liquidation, right? The dumb money shorts are all trapped at the bottom here, where the smart money shorts were covering. So that makes it very kind of sticky, a little bit difficult to trade. RTH yesterday was okay, right? But the higher a market goes, especially built on trap shorts, it gets harder to trade. It gets stickier. You get less volume. We've got not bad volume this morning, so that's an interesting thing. We're going to be looking to see now if we get any sort of liquidation, right? Here's our market profile chart in detail. You can see our overnight low. If you look at yesterday's trading, when J period opened, it corrected inventory down. And then K period opened, got 2 ticks, and we went straight back up. Structurally, folks, where the overnight low is in a market, that's the first place that shorts are trapped, right there. Because like the video I did said, support is created by unfilled buy orders. Unfilled buy orders are put in by short sellers who are looking to cover. They're always the first to buy. So that's why we have support at 63.43, right? And then any subsequent attempt to come down to that overnight low has been bought, right? So one time framing up, right? We adjust inventory like we're doing now. Look at these half-hour periods. They're getting tighter. So what we're looking for in 24 minutes when London opens, can London take out that 63.59 and 3/4 area? If London opens and can't take it out, if it rotates down, finds a bid, it's going to rotate up and try and put in a new overnight high. Okay? 2 days ago, we have our position up here at 63.68 and a half. and then upper stops at 71, and then that's our all-time high. It's not the previous day's high, it's the high of 2 days ago. Sorry, I have that in the wrong place. So that's what we're looking at tonight. Pretty choppy. I was watching this area here very intently. I thought, okay, we just did some distribution, and when we come down here, maybe I can take a short from 61 down to VWAP, down to 57. But right now we're doing a look below and fail. So no reason to short the market if it looks under 61 and a quarter and decides that it doesn't need to sell off any lower. A little bit tough, right? A little bit tough. So say we were looking to take a long here on a look below and fail. Well, first of all, what are the market conditions, right? What are the market conditions? The market conditions are choppy and slow. How does that affect my trade? Well, if I buy, say, 62, 62 and a quarter, 61 and three quarters, right? If I buy those areas, right, I'm going to use like 61 as my out, or 60 and three quarters as my out if I want to give it a little room to work. And I know that there's going to be sellers here at 63 and a half, right? Because that's where they were before. And then at 64 and a quarter, right? So now already tactically I know that if I do get in a trade, like say I buy 62 and a quarter, right? And I bid for one at 61 and three quarters, right? And I put my first out at, say, 61, right? Where am I going to put my sell order? Well, I'll put it at 63 and a quarter to see if anybody bites. Right? And this is how you trade with some sort of tactical intelligence. Right? So I'm long one at 62 and a quarter. I'm bid for one at 61 and three quarters. If it breaks 61 and a quarter, right, I sell at least one of my contracts and probably out, right, at 60 and three quarters. Right? My first sell order is 63 and a quarter because I want to front run the sellers at 63 and a half. Okay? Now, it's not a great trade in that you're not looking to make a lot of money. You're testing the market to see whether or not the sellers are aggressive where you're buying it. Right? Now I sit and watch the offer. Right? See, there's sellers here too. So I know for this trade to work now, it's gotta tag the 63s. Let's see if we can take out the 63s. Right? If not, I know that the sellers at 63, just under 63, are a little more aggressive. Right? And this is how you can tell tactically how your trade is working. Right? So we're offered at 62 and three quarters, no print there yet. Hey, one. Hey, Johnny, how you doing? Welcome to the folks joining us on YouTube. There we go. There we got a 63 print. I'm offered at 63 and a quarter. Right? Let's see if I can lose. If I can't sell it at 63 and a quarter, oh, I'm out at 63 and a quarter. And I'm going to put my second contract out for sale there too. Just in case. Or maybe what? I'll move it down to 63. Right? I'm out at 63. Okay? So that's the look below and fail. Right? Why do you take the trade? The trade is based on the fact that the market goes under this level, comes back up. There's no need to sell under 61 and a quarter, so you buy inventory here and you sell into the strength of the move higher. How is Port Jeff? Uh, Long Island in the summer. Right? Do you see how the lows kept moving higher on the candles? That means the bid is following the offer up. The buyers are following the sellers up. I put my sell orders just right where they sold before, because I know they're going to sell again. See how they're selling again? It's very clear, right? This way, you don't have any delusions of grandeur when you're in a trade, right? You actually have tactical information that you can use. So if I know that there are going to be sellers here, why would I let them take my customer, right? I'm long product here, and I need to turn that product into cash, right? So you have inventory that you want to take and turn into cash. So if somebody else is going to steal your customer, there goes your cash. Does that make sense? When you are long, you're like a merchant, right? You own inventory, right? And you need to sell that inventory before somebody takes your customer. Now, I know people want a 20, 30-point trade, right? Does this market look like it's giving you a 30-point trade where you have back and forth maybe 5 or 6 points, right? So first of all, you can't be delusional when you're doing business, right? Like I can't say, I want to be Jeff Bezos and I've got a lemonade stand, right? Make sense? Like I'm going to buy a $600 million yacht by running a lemonade stand, selling lemonade for 25 cents a cup. It's not going to happen. You have to have realistic expectations, right? But it's not all that bad. Because if you make 2 to 3 points on one E-mini and then you scale it up to 3 to 5 E-minis, you could actually make money to pay your bills, right? I call it blue-collar trading, right? Where you come in, you learn how to make a couple of $100 a day, and then you scale it, right? You know, you do a 3-point trade with 8 contracts. Do the math, right? Just simply do the math, right? If you do even just a 2-point trade is $100. On 8 contracts, that's $800. You do that trade once a day, 20 trading days in a month. You don't need to be a rocket scientist to figure out that you can make a living. You can make a living on 2 to 5-point trades and not have to spend all your time babysitting trades. There's the next level of selling, right? So say I didn't get rid of all my inventory at, 3 and a quarter, 3, put some out here at 4. Let's see if we have enough juice to put in a new overnight high, right? If we've got enough people trapped short, they'll start coming in and realizing that they have to cover. That'll blow out that 65 level, create some buying, and we'll move up a little bit. Let's see what happens. Does this stuff make sense to you? I'm really trying very hard to help people be practical about their business, right? Trading is a business, and I want people to have realistic expectations and to have manageable expectations so they can actually make a living without freaking out. these markets are trading all-time highs is not it's not easy. It's definitely not fun, you know. And the other thing I ask people is, okay, you want to make 20 points on a trade, right? And I'm saying this with the ultimate humility. If you're making 20 points, well, how many contracts? Well, 20 points on one E-mini is $1,000, right? 20 points on, say, three E-minis is $3,000. And you have to ask yourself, do you make $3,000 a day in your regular job? Right? So say you've been trading for a year, right? Do you make 3 grand a day at your regular job? Now I know some people do, right? I know my old securities lawyer used to at $1,500 an hour. But not a lot of people make three, four, $5,000 a day. So how do you expect all of a sudden to start a new business and make that kind of money? It's kind of delusional, don't you think? Just saying. Hey, Macy, nice to meet you. How often do you have live sessions? Twice a day. Twice a day, every day. So at this time, and then at 9 o'clock Eastern time, right? We got to have realistic expectations. We have to be realistic in business, right? So why not make, you know, and I always ask traders, and they're always like, well, why don't you hold trades longer? Well, because I don't have to, right? And I don't really have the time because I'm coaching and I'm working with some companies and I'm working on certain projects. So I like to trade, make my money, pay my bills, and then be done, right? So, and then I always ask the traders, like, are you consistently profitable? No. Well, why are you trying to make 20 points a day if you can't even make $50 a day and keep it, right? I mean, not many traders. How many traders, right? And you guys don't have to answer this. How many of you guys are consistently making at least $100 a day minimum and not losing it? Consistently. And not for like a week or two. I'm talking 3, 4, 5, 6 months. How many are consistently making $100 a day, not blowing up accounts, not losing all their money? Probably not a lot of you guys. But everybody wants to make 5 grand a day. So how does that compute, right? So you have to wire yourself for success. In order to do that, you have to have the humility to be able to go, I'm not going to be able to do this to what my ego says I should be doing, right? I mean, it happened to me. I'd go from making a couple of $1 million in a week on a deal to not being able to trade one E-mini. So is it humiliating? Of course it is, right? You know, it's tough. Retail trading, retail trading is like, you know, it's really it takes your ego out to the woodshed and just gives it a good beating, right? It's horrible, right? But learn those lessons, right? It humbles everybody. You're not the only one. I'm not the only one. There's no one I know who has traded retail who has not gone through the spanking machine and gotten their butt kicked. Anybody who says that they've been a retail trader and they've never lost money and they've done nothing but make money, they're lying, right? They're just completely full of it, right? So learn how to make 50, $100 a day and keep it, right? Like, can you keep the money that you made, right? Are you actually taking money out of those funded trader accounts? Or you just keep blowing evaluations and doing your evaluations, and when you get to the real stuff, you blow yourself up. Ask yourselves these questions. We can help you with this at the Trading Syndicate, and that's what we do every day, right? You guys hold me accountable, right? We hold each other accountable. We act like each other's not boss, but like other traders when you're bouncing ideas off of them, right? And if you need help, we help you work through issues, right? That's what I like about our room, right? Yeah, it's easy to say zero emotions, right? But it's harder to do. So what I've come up with, Macy, is I've come up with a way where you put on trades and you think about the business of the trade, right? And when you think about the business of the trade, it helps dial down the emotions, right? We can't get rid of the emotions, but we can try and dial them down with procedure, right? And so if you have a procedure that you practice, right? You put your buy in, you put your stop in. When your buy gets executed, you automatically put your sell orders in, right? It does take time. It takes repetition. Just like an airline pilot needs repetition in a simulator to know what to do when turbulence hits. Just like a boxer needs repetition to learn how to duck and dive punches, right? None of this comes, no, I've never seen anybody pop out of the womb and start trading and make money, right? Yeah, we have to control our actions, and the best way to control our actions is to have our trading methodology systematic so we do the same thing every day, right? And then you think about the business reason why you're in the trade. It will help you control your emotions. Because here's the thing, folks, right? You can't blame emotions for bad business discipline. And a lot of people don't want to hear that. This is a poor high. We have competitive selling at 63, 64 and 3/4. Let's see if we can break that, right? Getting emotional is an excuse for bad business discipline. That's all it is. You will never see, like, what if you went to a heart surgeon and they said, look, say you go in for your heart surgery and your cardiothoracic surgeon's in there having a cigarette and shaking, going, I don't know, I just had a fight with my wife. I'm emotional. Is that going to instill confidence in you? Right? It's not professional, right? Think about it. You go to your doctor and they're like, oh, I don't know, I might misdiagnose you because I'm emotional, right? You go to your accountant, I'm going to do your tax return, but I'm emotional, right? There comes to a point where you can't use this emotional psychology crutch, and you're going to have to learn the business. You do that? I'm emotional. Maybe you shouldn't come to me today. Petra, you're hilarious. Oh, hey, and you have to tell me when you want to do that phone call. I know you're busy. Uh, so I have nothing against trading psychology. I just think it's been used as a crutch, and it holds people back. When if they could learn about the business, they wouldn't be so emotional. Right? You're emotional because you have no idea what the hell's going on. right? You can't blame people for being emotional, right? You know, if took you and put you on a sailboat in the middle of the Atlantic Ocean and you don't know how to sail, well, you'd be a little emotional, right? You know, Travis, if I put you in scuba gear and do some underwater welding and you don't know how to swim, you'd be a little emotional, right? There's some common sense, right? Okay. I don't see a trade here yet. There was the one look below and fail of 61 and a quarter, but right now, so okay, here's something that's going to help you with your emotions. When you see markets do this, when they've got this barcode kind of price action, right? Your brain should just go and relax, right? Right? When you see that chop, your brain should just automatically relax. And then when it does something like this, oh, that's when you wake up. You know, look below and fail. When it's monkeying around like that, just leave it alone because it's a pickpocket market. And now it's putting in a new high. It doesn't really know what it's doing. The order flow is not reliable at places like this. So the best thing to do is let the traders, the daddy warbucks traders, the big money traders, let them work this level out, right? Just like any of you who live in a place where there's winter, you're on the road, it's snowing like crazy, go behind the snowplow, right? Don't try and forge a path, right? Nobody sees your tears when you're welding. Ugh, right? Let the large traders work out important levels. A previous day's low, an overnight high, a previous day's high. Let the larger traders and the wholesalers, let them work that out. You don't need to reach for your wallet now, right? This is like going to dinner with people who have billions of dollars. They take you to a fancy restaurant, and the check comes and it's like 6 grand for lunch. You get alligator arms. Don't reach for your wallet now. Let the other people pay for it. There you go. Let them work this out, right? That was like a very, very sort of small stop run. And the problem with these markets at all-time highs is, do you see how slow the price action is? So that slowness kind of tricks your brain into thinking it's weak. And that's how short sellers get trapped all the time, right? Because they mistake this slow, creepy price action for a weak market. And because of electronic execution, it's the furthest thing from the case, from the truth. What's going on is the sellers have seen buyers, so they're just withholding price. Another poor high. Let's see if we get any London usually likes to come lower and get some cheap product. Let's see if we can do it here. So say you're short 65, right? Your stop is 66. And where are you looking? You're looking for around under 63 to cover. If the market can't offer under 63, then you know you're in a little bit of trouble, right? So say you're short here, your stop is here. Put a bid here, right? At 62 and a quarter. If you can't get one measly contract at 62 and a quarter and 3/4, then you know that there's no supply, right? And if you're a short seller, you need to know if there's supply or not, right? So I'm short 65, 64 and a half. I go and I put a buy order underneath 63. Right? So I go and put my buy order here. Right? 62 and 3/4. Now, if the market can't fill me at 62 and 3/4, it means people are front running that level, which means I'm going to have to pay more, which means this is not the greatest short in the world. Right? And you can very easily tell if you should be in a short or be out of a short. Today we have Tesla earnings, right? After the close. See how annoying that is? So say you've got a 62 and 3/4 bid in. You can't even break 63. Where are you going to cover? It's perfectly valid to short, but you have to be tactical about it. And Google? Oh, thanks, Renee. That's one stock nobody ever talks about is Google. I'm looking to see, can Tesla stay over 328 going into earnings? That's my big thing. That's my big level on Tesla. So see, still no fill, right? This is distribution, folks. That's what this is. Right? This is this product being sold up here. And every time they get down to where the bids are, they stop selling. Bit of another slow Globex. But at least you can see what's going on. Oh, any questions? Gosh, if it just keeps going between 64 and 65, this is going to be a really long half hour. Does anybody have any questions? Anything you want to talk about? We're being ultra patient here, waiting for this. There we go. How important is the accuracy of the balance loans? Uh, Nate, if you look in the JJ, whatchamacallit, where JJ levels, there's a document with my 5 steps. What you want to do with the balance zones is start drawing them out and then watching them to see how well they work. Before you trade on them. Now, yours don't have to be the same as mine. They just have to work for you. Now, Jiraj, when I'm looking for a breakout, I'm not looking to buy the breakout, right? Now, the way I've been trained is I'll have inventory here, and when the market breaks out, I'll sell into it because that creates buying for me to sell into, right? That's fine. What the most important thing, Nate, is does it look below a level and fail? That's your big thing. Does it look below a level and fail? Right? That's really all you need to care about. Yeah, your zones don't have to be exactly the same as mine. No problem. No problem. So, Jiraj, for me, I'll look and see if the breakout attracts buyers, but I don't have a trade set up other than just winging it to trade this. So, basically, it means just sit on your hands, right? It's not, unfortunately, these markets, especially when they're working out new highs and stuff, are not the best for retail traders, right? Sometimes we get the short end of the stick because right now it's more of a time for wholesalers to get rid of their inventory into the night buying. Yeah, this is, if you can, this is where you have to embrace the frustration that it's slow, I'm not making a lot of money. But here's the good thing, you're not losing any money. If you're not losing any money, that's really handy. Because guess what? When the time comes to make money, you'll be you'll have all your bullets. You know what I mean? These are very difficult market conditions to trade. There's no doubt about that. Very challenging. Why do the zones work so well? Because they're based on cost basis, Johnny. It's a really simple concept. For some reason, nobody talks about, right? That's how wholesale trades, right? Just like wholesale does business in the regular world, right? Right? You go and you buy, right, 1,000 TVs from China, right? You get a container load of them, right? You pay what, $100 per TV? You go and put them on sale for $800 a pop, and you sell as many as you can. Then people don't want to pay that. You got to put it on sale for 700, right? It's the same thing. The chart that you're looking at here, right? When you're looking at a chart of ES, NQ, Apple, Google, right? Whatever it is, it's just a sales chart, right? And it's telling us how sales of that product are going either on a daily basis or a minute by minute basis, right? And all the chart is doing is tracking inventory, right? That's all we're doing. And that's how wholesale makes money, right? And then sometimes they lose money, right? Sometimes you got to put it on sale under your cost basis just to get it out the door, right? But that's business, right? Sometimes, you are going to have to take a loss. See you, Renee. Have a good one. Get some rest. Does everybody kind of understand what I'm talking about there? Cool. It's all about cost basis. Here's a little secret, right? The, the people who have the lowest cost basis always make money. That's why when you buy a stock at $5 or $10, these small cap stocks that everybody likes, they're really popular, right? Those deals, if you're buying the stock at, say, $8 a share, somebody's selling it to you, right? Who owns it at probably 50 cents. So when a cost basis, what you want to do, Johnny, is you want to trade at the edge of the cost basis. For example, here, when the market looks below and then comes back up, right? So when you establish a cost basis, that's when markets are slow, right? So here, you're establishing a cost basis, and the wholesalers are both sides of that box, right? They'll buy underneath the middle, they'll sell over the middle. And they'll do that. Generally, they're always net long. Then you go and you sell it, you put it on sale, that brings in buyers. You see? What you should do, Nate, if you pay attention when I'm trading, right? I will I will announce, okay, I'm long here, okay? My stop is here, right? So this is the sequence of execution. Step 1, put in your buy order. Step 2, put in your stop. You with me? Nate? Okay, right? Step 3, put in your sell order. Now, your sell order has to be based on, like, it has to be realistic, given the business conditions that you're in at the time. Okay? So, I know there's going to be sellers here, right? Let's see, I'll go and put a sell order just one tick about this area and see if it gets taken, right? So that's step 3, okay? If the market does not execute that my sell order, I flatten the trade. Does that make sense? So you put your order in, you put your stop in. As soon as the execution happens, you go and you put your sell order in. Now, why do you do that? There's a few reasons for doing that. Okay, the reasons are when you go and you put your buy order in, right, and it's executed, you go and you put your sell order in so it's in the lineup because the CME uses FIFO, first in, first out. So your orders are in a line. You want to get to the front of that line. That's why you go and you put your sell order out. That's number 1. Number 2, it tells you whether or not the trade is working. So do you understand? Right? This is why it's great to have bracket orders and all this stuff, but how about do stuff manually so you actually understand what you're doing? So there's a business reason why I put my sell order here, because if the market cannot take out my sell order, then I know that there's no demand for my product. Right, Nate? So it's like maybe you bought 100 cases of bubble gum that tastes like root beer, and you go and you put it on sale and nobody buys it. Then you know that that inventory you own, you need to mark it down to get rid of it, right? Does that make sense? There's a business reason for why you do everything. Your execution is based on practical, simple business. The look below and fail is based on the fact that the sell orders are completed. When the sell orders are completed, price rotates up. It's a very simple business thing. It's supply and demand. People have been talking about it since the beginning of time, right? So that's what you do. Your take profit has to be in a place that's realistic. So if your take profit does not get taken, then you jump, you snap into motion, right? You don't just sit and let the grass grow under your feet because somebody's stealing your customers if you're long. Got it? It's got to make sense, right? Trades have to make sense. There has to be a business reason for taking a trade. So, like when I teach, I do a lifetime mentoring program, and every trade has a business reason behind it. If you're in a trading room or taking a trading course and you ask the instructor, what is the business reason behind this trade? And they can't explain it to you, or they say some nonsense like it's random, keep pushing. Keep it pushing. Because it's a business, right? Trading is a business. Anybody who tells me that trading is not a business and that it's game theory and all that is full of it. Means they've never sold anything in their life, right? Trading We are the truck drivers that deliver product to customers, right? Investment bankers create product, salesmen sell it, and the traders are the basically glorified truck drivers, right? And we transport those goods. You guys pick up on our traffic patterns and try and catch a ride. It's as simple as that, right? That's all it is. Right? There's no game theory, there's no psychological edge, there's none of that. You buy a bunch of cheap crap, you sell it at a higher price for a profit. That's why it's called a market. Right? And hopefully, you guys come and join us in our trading room and learn how to do this in an intelligent way where you can earn a living, right? And manage your risk. And at least, some days you're not going to make money every day. That's not how this business works, right? But on the days that you don't make any money, you don't lose money. So you actually have capital to work with the next day and you're still in business. That's the most important thing. Okay? And we're creeping higher here. There's an untraded point of control here, which means we're coming into an area where there is position, right? This is the last inventory, right? We've got to get past this point of control at 68 and a quarter, and then 71, and then 74. Those are the levels. And with that, I think I'm going to stop a little early today, folks, so you guys can enjoy yourselves. It's a bit slow. Thank you so much for joining me. I'll see you at 9 a.m. Eastern Time for our RTH session. Come visit us at tradingsyndicate.org. We appreciate you watching. Thank you so much. And we'll see you in a few hours. Good to have you back, TradeMaker. Thank you. Thanks, folks. Bye for now.